Warren Buffett has 78.4% of his entire portfolio in 5 stocks only. That's about $188 billion. Almost 80% of Buffett's portfolio is invested in only 5 stocks. In the last 55 years, Buffett's portfolio increased by 2.7 million%. All that means that an investment of $100 on Berkshire Hathaway 55 years ago would today be worth $2.7 million. I'm not a financial advisor. On this channel I go over my experiences, my research and my opinions. Always do your own due diligence. Never buy stocks because you saw somebody else buy it. Buffett has said that we do not need to find 1,000 companies or even 100 companies in our lifetimes in order to be successful investors. All we need to do is find 1 or 10 successful companies. Warren Buffett did this in the past, and almost 1 century later he is still doing it. There is no gambling. Buffett spends all his days studying, reading these companies and reading company reports. Sometimes things happen like a pandemic, but even if one company fell with 9 other successful picks, at the end of the day everything will be fine. Over-diversifying can often be a protection against lack of knowledge. Once a portfolio is over-diversified with 100 or 500 companies, it is basically copying an index. The S&P 500, for example, has 500 US large companies. The main benefit of picking individual stocks is to make winning picks and outperform the market. If a single individual holds, for example, 200 stocks, what happens is that it is impossible for a single person to know in detail what is happening to each of those companies. At that point, it might just be better off investing in an index like the S&P 500 or something like that and just ride the market. If you want to get the best results in your investments, drop a like. And if you are new here, subscribe, hit the bell and share this video with a friend. Buffett's biggest position, number 1 position, is Apple. Let's check it out. From the usatoday.com, Warren Buffett has 78% of his portfolio in these 5 stocks. Berkshire Hathaway CEO Warren Buffett has produced a handful of jaw-dropping numbers over the years. For example, the Oracle of Omaha, as he is come to be known, has led Berkshire Hathaway stock to a 20.3% annual average return over the past 55 years. In aggregate, this works out to gain of 2,744,062%. Put another way, $100 invested in 1965 into Berkshire Hathaway stock would have been worth over $2.7 million by 2019. But this isn't the most surprising Buffett statistics of all. Though Warren Buffett and his team do invest in dozens of companies, Berkshire remains concentrated in only a few key names. As the closing bell on October 8, 78.4% of Berkshire Hathaway's invested assets, almost $188 billion, were tied up in only 5 stocks. Apple, $115.4 billion. In Warren Buffett's view, Apple has become a 3rd company within Berkshire Hathaway. It accounts for almost half of Berkshire's invested assets and has generated close to $80 billion in unrealized gains for the Oracle of Omaha, not counting dividends paid. When investors buy into the Apple growth store, they know exactly what they're getting. The iPhone remains the smartphone of choice within the US and will more than likely be a key growth driver in late 2020 and early 2021 as Apple prepares to unveil its next generation 5G device, within telecom providers scaling up their wireless infrastructure upgrades. This has the potential to be a multi-year uptick in iPhone sales for Apple. Apple CEO Tim Cook is also overseeing the company's transformation into big-time services provider. Services offer juicy margins and have been growing by a double-digit rate. Buffett is also a huge fan of Apple's capital return program, even though its yield of 0.7% leaves a lot to be desired. Apple is paying out in the neighborhood of $14 billion annually in dividends and has aggressively repurchased its own stock. And the number 2 hold is Bank of America with $26.1 billion. Generally speaking, Berkshire Hathaway's ownership stake in bank stocks caps at 10%. That's because a stake above 10% would mean being classified as a bank holding company by the Federal Reserve, which could come with a host of restrictions. But with the blessing of the Federal Reserve Bank of Richmond, Buffett and his team has been given the okay to take their stake in Bank of America up to as much as 24.9%. It's no secret that Buffett is a big fan of bank stocks, primarily because they're long-term money makers. The Oracle of Omaha often fills Berkshire Hathaway portfolio with cyclical companies that will be able to take advantage of long stretches of economic growth. Bank of America certainly fits that bill as possibly the most interest-sensitive of all money center banks. When the Fed does choose to begin raising rates, Bank of America will be a key beneficiary. Bank of America has also done an excellent job of controlling its non-interest expenses in recent years. As digital and mobile banking have grown, Bank of America has chosen to close a small percentage of its physical branch to reduce its expenditures. Buffett's third biggest position is Coca Cola, 20.2 billion. Beverage giant Coca Cola is the longest tenure holding, 32 years, in Berkshire Hathaway's portfolio and is unlikely to be sold or pared down anytime soon. The lure of Coca Cola is twofold for Buffett. First, there is the combination of branding and geographic reach. Coca-Cola operates in every country around the world, with the exception of North Korea and Cuba, and offers multiple ways to connect with consumers. It has Christmas tie-ins, numerous celebrity and social media ambassadors, and is arguably the most recognized consumer packaged goods company in the world. Coke has a significant stake in the global cold beverage market, which means few if any surprises come earnings time. Secondly, Coke is a dividend aristocrat. That's making Buffett a boatload of money based on the $1.64 per share it's paying out annually, and Berkshire Hathaway's average cost basis of only 3.25 cents. Buffett and his team are doubling their initial investment every 2 years. And the fourth biggest position is American Express, 16.1 billion. Have I mentioned that Warren Buffett likes financial stocks? Payment services provider American Express is the third longest held stock in Berkshire portfolio at 27 years. As noted earlier with Bank of America, Buffett really likes companies that can take advantage of long periods of economic expansion. As a double dipper, AMX is built to do exactly that. It processes transactions for merchants within its network, but also lends money to individuals and businesses, thusly reaping the reward of interest income and or fees. Though this does expose American Express to rising loan delinquencies during recessions, economic expansions last substantially longer than periods of contraction. Furthermore, American Express has done a particularly good job over the years at courting affluent consumers. The well-to-do are less likely to change their spending habits during minor economic contractions, thereby allowing American Express to navigate its way through economic weaknesses better than some of its peers. And finally, fifth biggest position for Buffett is Kraft Heinz, 10.2 billion. Finally, there is Kraft Heinz, which might well be one of Buffett's least impressive investments in recent years. Berkshire Hathaway owns a little over a quarter of the company's outstanding shares. The issue here is that Heinz overpaid for Kraft Foods in 2016, which is a big reason the combined company took a more than $15 billion goodwill write-down on a number of key brands in February 2019 and slashed its dividend by 36%. Even though the pandemic has helped boost sales for some of the company's core packaged food brands, Kraft Heinz is still lugging around $33.3 billion in goodwill and almost $29 billion in long-term debt. There is just not much wiggle room or ability to step up spending to reignite sales growth. What do you think about Buffett's picks? Leave your thoughts, comments, and ideas in the comment section down below. My opinion, a company that has been around for 10 years or 30 years or 100 years at this point certainly know a thing or two about how to ride complicated economic times. There is a quick clip that I would like to take a look.
So those record buybacks, what are we learning about Buffett's capital allocation strategy here?
Well, I think this quarter really showed us that Buffett is not just sitting on the sidelines. And when this pandemic started, Buffett was really quiet. He really wasn't doing that much, and he was, if anything, selling airline stocks. And so he seemed really cautious. But now we learned that he spent a record $5.1 billion buying back his own stock. And we've learned in recent months, in July and August, that he was willing to do a natural gas energy deal, and he was also willing to buy up more Bank of America stock. And I think if you take all of those together, it shows that Buffett is willing to put some of his money to work. He's willing to do that in this climate. But he is sticking close to home. You know, he's buying his own stock, and he's buying Bank of America, a long-time investment. And even the natural gas deal, he owns a large energy empire, so it's a pretty familiar area for him.
So in what ways did the pandemic hit the Berkshire businesses?
So we saw it hit operating profit. That dropped 10% in the quarter, and it was across a range of businesses. I mean, the railroad, BNSF, saw lower volumes across all of its products. We saw a lot of their retailer companies get hit. And we also saw Precision Castparts, which is one of his biggest manufacturing businesses, get really hit because of the slowdown in air travel.
So what did we learn about his investment strategy, especially his style, because we know he tends to be careful and very conservative?
Yeah, well, I think he really stuck to that knitting, but he is more willing to put money to work in recent months than he was at the start of this pandemic. And so while, you know, it's hard to say that, you know, he's quite eager to start doing a lot of deals, I think it does show that maybe there's a little more clarity with the situation and how Berkshire's weathering it.
And Catherine, you know, at a time like this, would we expect to hear, or at least investors are hoping to hear, a little bit more from the man himself in terms of a potential, you know, investor call?
I think investors would obviously love to. I mean, he normally does not do earnings calls, and so it can, you know, the second quarter results can tend to be kind of quiet, but he's been relatively quiet over this whole pandemic situation, with only his annual meeting in May being the one time we've heard from him. And I think, you know, he's very careful about this, and his whole strategy is to really absorb a lot of information, read for hours a day, and I think that sort of shows in that, you know, he's sticking to that strategy instead of talking to a lot of folks.
He's sticking to the same strategy, and that's what he always did. He knows what he's investing on, and he's studying so much. I hope you enjoy learning a little bit more about Buffett. Thank you so much for watching this video. Feel free to check out some of the other videos coming up on the next screen. Have a wonderful day. The main benefit of picking individual stocks is to the main benefit of picking individual stocks. The main benefit of picking individual stocks is to make winning picks. The main benefit of picking individual stock is to make The main benefit of picking individual stocks is to make winning picks and outperform the market. Berkshire Hathaway CEO Warren Buffett has produced a handful of and Buffett biggest and finally Buffett biggest fifth. I hope you enjoy learning a little bit